Tackle today, the Justice Brothers from Tackle Trading, bringing you all the charts, the news, the analysis, so you can be informed in just a few minutes. Before we get going on that analysis, be sure to check out the Trading Justice podcast that we released yesterday. Had a fun conversation on the election and other issues in the market. And it is not too late to sign up for the Master Trader event where you can learn to read charts like a pro. That event is today and tomorrow. Be sure to sign up for that. Matt, markets seem to be hesitating a little bit as we start the week. Seeing large cap stocks overperform a little bit, but we're trading in this little consolidation pattern as we get going.
Yeah, that's really the only thing we're really looking at here as we start the week off on a Monday morning on a little bit of a sour note here. Not too much, just a little bit of a downward movement in price here to start the week, but really doesn't change anything on the S&P 500 itself. A little bit of inside candle waiting on that 9 EMA to catch up. Talked about this in detail during the Trading Justice podcast over the weekend, so definitely check that out here today. But at the end of the day, still looking at the exact same pattern, high base, kind of in that mid tier of the current leg in the market, waiting on that 9 EMA to catch up. When you do take a quick peek at the other indexes, just showing a little bit more volatility in what we would describe at Tackle Trading as interest rate sensitive areas of the market. I'm sure Coach Mark will talk about that here in a second. So you're seeing a little bit more volatility and downward movement in price in the RSP, little downward drip, but doesn't change the pattern there. Looking at the Qs, just a little bit of a doji. Whenever you see the S&P do a little bit better than the RSP, that is showing you a little bit of tech. We are seeing NVIDIA up here today. Most of the market down a little bit here today, but overall not seeing any changes of patterns. However, on IWM, you were a little bit overextended going into the breakout, and we talked about in the newsletter, developing patterns on IWM, and what I didn't talk about was that pullback. But we are seeing that pullback. And as long as you stay above the 20-period moving average, you will be looking at that as an increase in support. However, you are giving up the breakout zone at 225. Obviously, IWM, small and mid caps, are very sensitive to the interest rate conversation, and that is certainly playing out here today. However, if you do see an increase in support, it's not going to kill the potential breakout of that multiple time frame at 225. It's as long as you stay in some degree of bullish pattern here, whether that was a high base, whether that was a flag, whether that was a retracement, you really never know what the path the pattern takes. But the pattern we now see in the market is that pullback with a very important support level right now around that 220 level.
Yeah, getting to the economic data, we'll talk about those yields here in a second. Nothing to report on an economic news specific. We have a very light week. Thursday is the highlight day this week with the first look at manufacturing and services PMI with unemployment claims. But this is going to be a micro week unless any geopolitical event. It's not going to be an economic week. The narratives we enter the week with are going to be the narratives we end the week with from an economic calendar. Anything stand out on the calendar for you, Matt?
No, it really doesn't. This is not a big economic week here this week. There wasn't a big economic week last week. We're in earnings season, and it's the earnings conversation that's going to kickstart the market.
Yeah, and give me TLT before we get into the stocks and the news. Give me TLT because we are seeing interest rate sensitive areas, small caps, ARC, biotech, the kind of things that trade on yields. Those are definitely underperforming as we see yields go up. Now, whenever you look at TLT and you see a big gap down red candle, that's because yields are going up in that inverse relationship. Matt, this has been propelled by stronger economic data over the last 3-4 weeks. And Janet Yellen released some deficit numbers after the bell. When do you always release bad news? After the bell on Friday. Well, bond bears picked up on that still over the weekend when the deficit numbers were pretty staggering. And bond bears love trading on that. Well, if you are not going to stop spending and you are going to put endless supply on the market, we're going to drive up yields. They've done that several times in recent years. I think that's what's occurring with yields this morning and is carrying over to some stock areas that are sensitive to that this morning.
Yeah, and it's also the number one reason why we like gold. So
indeed, Matt.
There's some commonality in bond bears and us in gold ownership.
Yes, there is absolutely that. We got about 40% of industrial sector reporting this week. Earnings the stocks in the news. It's going to be really, really busy. You talked about this on the podcast. Lighter today, the next few days in Tackle Today, we're going to be highlighting a lot of the big earnings reports each and every day. But what do you have for us today?
Yeah, on Monday mornings, you really don't see a lot of the important news come into the market. You are right. On a Friday afternoon is when you usually release a little bit of bad news. But from an earnings perspective, it doesn't start until even Monday night's usually a little bit light. Tuesday morning through Friday morning, it's kind of the time when these companies like to report. And so big industrial week, no doubt about that, but a big week in earnings in general. I mean, when you have 110 S&P 500 components reporting earnings this week, there's not a space that's not going to be influenced. But when you do look at the with the all the sectors out there, industrial has 25 stocks that are reporting earnings, and a tremendous amount in aerospace and defense. So keep an eye on industrial, specifically on aerospace and defense. But once again, you do have catalyst in many areas of the market. For example, Tesla in consumer discretionary. But as of today, we got Boeing, KVUE, and ASML. And quite frankly, the ASML and the Boeing news is something that we've talked about in Tackle Today over the last couple of weeks. Just a little bit of updates on those news stories. With Boeing, you do have an agreement reached between the Machinist Union and Boeing on a new contract proposal that does give a 35% wage increase over the next 4 years to the Machinist Union. This has been one of those dark clouds, and there is a few dark clouds that hover over Boeing, but this has been one of those dark clouds that has been hovering, and now you eliminate that. That's a positive news story for Boeing. Obviously, you're going to see a little bit of a gap up coming from a low point, but Boeing has some tremendous amount of work to do. Not, like I said, not the only dark cloud that is hovering over this company, Boeing. On a little bit of positive news for KVUE, activist investor Starboard Value has taken a large stake in KVUE, and basically, when you have an activist investor come in and take a large stake, they're looking to make some efficiency changes in the company. They maybe not have an idea or two; they have an idea on efficiency, and so they're looking to get a little bit more efficient at KVUE. Usually, that's seen as a positive for the company itself. And we're certainly seeing that play out today. And then on ASML, just a little bit of a continuation situation from last week's earnings report where they misreported on the timing, had some concerning earnings data. I didn't feel it was the worst earnings season out of ASML. I certainly didn't feel it was the best. I would have assessed probably a doji if they would have just reported on time, but because they reported outside of their calendar date, they spooked the market, shocked the market, and I described this as a cardinal sin out of ASML, and it's a self-imposed cardinal sin out of ASML. Did not need to occur, should not have occurred, cannot occur, and traders will not forgive that out of ASML. And you're starting to see a little bit of that with Bernstein lowering their price target on ASML, and they were talking about a challenging outlook for 2025. Mark, I do not believe that for 1 second that was the excuse out of Bernstein. It was due to their misreporting. I guarantee it, because when you actually look at their outlook, yes, was it a beat and pulled off a hat trick? Absolutely not. But it was not a bad report, and their guidance there was a little bit of a slight adjustment, I would say, on their guidance. And so did their earnings itself equate to a downgrade? I think that's a little bit too far, quite frankly, for Bernstein. I'm fairly familiar with Bernstein's upgrades and downgrades. I feel this is the same thing that I've been talking about since the very second we found out ASML did not report on time. It's just a cardinal sin, and you're starting to see it across the board. ASML has a little bit of a bearish retracement pattern forming right now. When you do look at the pure technical side of the equation here, And let's take a quick peek at Boeing. Just a little bit of a gap up into that 50-period moving average. The 50-period moving average has proven to be stubborn for Boeing. And so you saw that same type of situation last time we came up to the 50. And then all of a sudden you had a tremendous move to the downside. A lot of dark clouds, like we talked about, covering Boeing. And so you're going to have a challenging environment in any reversal type situation. So keep an eye on that 50-period moving average if you are looking at Boeing. On ASML, just looking at this from a pure technical perspective, not really a gap down because they misreported on their timing. So it just kind of happened during the actual trading session last Tuesday. Now you're just seeing a bear flag. You're seeing what you would describe as a secondary pattern, a bear flag. You would think that the downgrade out of Bernstein would have had a little bit of a bigger impact. But then again, the market is still most likely digesting that oversized price movement from last Tuesday. 9 EMA is still a stone throw. We're talking 40 points away from the price action right now is that 9 EMA, which usually is the momentum check for the price, whether the price is going up or whether that price is going down. And then when you look at KVUE here, a little bit of a gap up as Starboard takes a position, and you got a pretty important resistance level right around 23 and a half. Pretty clean resistance level right around 23 and a half. And that's a mid-tier resistance level as well. You'd love to see a little bit of price action get dialed in right around that 23.50 level and start thinking about a little bit of a multiple time frame breakout. That's all I got for stocks in the news here today.
I like what you said about gold a few minutes ago. One of the reasons we like gold is the governments will not stop spending money. That's one of the many strong term, and we've made the case on gold many times. But now it's a technical one. Paying attention, we're trying to extend the breakout level on both silver and gold in the face of rising yields and a rising dollar, which have ignored these charts. At some point, Matt, are markets going to start paying attention to things like rising yields and the dollar? I mean, that's one of the questions on my mind at the start of the week.
It has to at some point. Like you cannot discount how the dollar impacts these companies in the S&P's ability to sell product to Europe, to China, to around the world. So of course it has to at some point. Do commodities care, such as gold, about the dollar and the dollar going up? Of course it does. There's no doubt about that. But we're just kind of seeing the development of a secondary pattern. And so to answer your question, Mark, I would say it really depends. Yes, it's going to matter. It always does matter. The dollar never doesn't matter. But it's to me, it's really about this next pattern on the dollar. This next pattern, what you're seeing right now is the development of a high base. No doubt about that. We have a high base in the market working right now. If that pattern gets confirmed to the top side, you're going to start seeing that the dollar impact the market. You're going to start to see the dollar impact the commodity space. It hasn't as of yet, but I don't think I just don't see that being the case if we form a high base here and then we break out of that high base here. You look at it on a weekly chart, you form a high base here on this on the daily chart, you break out of that. There's nothing really that stops you until you get back up into that 106 level, which is about the exact same movement that you've had over the course of this 3-point movement to the top side. And so, yes, it would impact that. And yes, you absolutely should be looking at the dollar this week, because if we do break here and we do run here, it's going to cap out price performance in some areas of the commodity market that have been discounting that. And so, yeah, Chucky, I do think that's going to be a more important part of the storyline this week than it has been. But then again, I thought that last week and it didn't matter. I thought that a little bit the week before and it didn't matter. But the higher you go, now you're starting to get into some open air from a.
Yeah, I think on the dollar, Matt, I think a lot of us, and when I say a lot of us, the entire market has been like, oh, this is a cute move of the dollar. It's having a little thing, but it doesn't matter. And then at some point, people, traders, investors, algos are like, no, this is starting to matter, right? I think that's the kind of the stage we're in if we break higher here.
Yeah, and it's not one of those things where it's like if you break higher here and you're going to 106, that you would think there would be a massive move to the downside. You would cap out your price performance, but again, it has discounted it so far. I don't think it would continue to do that. I definitely think you want to see some downward movement in price if you're going to see continuation in the commodity movement, commodity space here this week. Now, looking at the commodity space from a pure technical perspective, a little bit overextended here on the gold chart as you did break out 2 days ago. Nothing to be too concerned about, just a little bit overextended going into that breakout. Maybe a little hesitation as that 9 EMA does catch up to it. When you're looking at silver here, silver had such a power move on Thursday, on Friday, that those types of candles typically take a little bit of time to get digested, and anything back down into 30, which was a beautiful breakout of 29 and a half. I know there's a lot of people on silver at Tackle Trading. You're now, you shouldn't be chasing this price action all the way up to 31. You've went from 27 and a half all the way up to 31. Look for a secondary pattern here. It doesn't have to take long to develop. If you're not involved, that's what my recommendation on the silver side of the equation would be. And then when you're looking just across the board, copper still going through some development at the low price, a little bit of a deeper retracement. Anytime you see a deeper bullish retracement against the previous upward movement in price, you're going to need to see some consolidation. And that's exactly what copper is doing right now. That's most likely a copper conversation is most likely after FCX and Southern Copper do report this week. On the crude oil side of the equation, still a massive stay away for us at Tackle Trading until we start to see volatility decline. On the Bitcoin side of the equation, we talked extensively over the weekend in the podcast regarding Bitcoin. Definitely check out that podcast. As for now, a little bit of choppy pricing above the breakout channel, a little bit overextended from the actual 9 EMA itself.
Yeah, we're going to have extended conversations on all of these topics in the Traders Lounge today as we do our Macro Monday. Easy to become a member and participate in that Traders Lounge. Just go to tackletrading.com and sign up for that 15-day free trial.